Agree Realty Corporation stock, ticker symbol ADC. This stock is down 22% year to date, underperforming the overall market big time. On the 1st of August, ADC presented quarter results where they missed on FFO but beat on revenue. For the upcoming earnings, analysts have a mixed feeling. People love ADC stock because of multiple reasons, and one of them being the monthly dividend, and I understand why with dividend yield at 5.3%. So could this be the perfect moment to buy ADC stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does ADC do? Agree Realty Corporation operates as a fully integrated real estate investment trust, mainly focused on the ownership, acquisition, development and management of retail properties, net leased to industry-leading tenants. If we dive in the most recent earnings report, we see that net income per share decreased 7.2% year over year to $0.42. FFO was reported at $0.98 per share, unchanged year over year. AFFO increased 1.1%. Dividends increased 3.8% year over year, which is very nice. The last number in this list that I think is very important is the net debt to EBITDA. Right now it is sitting at 4.5. It's not a bad number, but I prefer a range of 5.5 to 6.5 to be honest. In here we see a snapshot of the breakdown in sectors and tenants. Grocery stores are by far the biggest sector with 10%. Home improvement is second with 8.9%. And auto services is third with 8.7%. To me this looks very well diversified. And if we check the tenant breakdown, we see that Walmart is the biggest tenant with 6.5%, which is a decent amount. Dollar General and Tractor Supply are a little bit behind, again looking very well diversified. ADC is really focusing on industry-leading retail companies, of which are 87% national orientated and only 12% regional. ADC is acquiring a decent amount of retail properties. It's expected to acquire roughly 1.3 billion in 2023, which is a little decrease year over year, but still looking good. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week, and also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. ADC is a 5 billion market cap company. PE ratio is not a fair metric to use with REIT, so I will be using the price to FFO instead. Right now it is sitting at 12.8, indicating they might be undervalued. Later in this video I will show you my 3 price targets for ADC stock, so make sure to watch until the end. Because price to FFO is only telling a small part of the full story here. Revenue is at 483 million, and in this graph we see that revenue went up in the long run. We see that margins are going up and down quite a lot in the long run. But the thing that most people are worried about is the decrease in margin since 2016. And to me this doesn't look any good. EPS is following the same pattern, however it is a bit more steadier I would say. Analysts expect 2023 and 2024 to be a tough years in terms of EPS growth. After that, it is expected that EPS returns to mid-single digits. For the revenue it is a pretty different story. 2023 is going to be a great year. After that things are slowing down just a little bit, but still looking at double-digit numbers, which is really good. Return on assets is sitting at 3.2%, which is a low number, even for a REIT. Return on equity looks also really low, and the most important number, return on invested capital, is sitting at 1.9%, which is again a low number. And it is slightly lower than the 5-year average, so that is also something that I don't like. Current ratio is at 0.71, which is a great number for a REIT, nothing special to mention here. Right now, ADC has 2 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. ADC has 11 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 5.3%, which is a great number. And keep in mind, ADC pays a monthly dividend instead of a quarterly dividend. Annual payout is at $2.92 and payout ratio is at 74%, which is around the average for REITs. The 5-year growth rate is at almost 7%, which is a decent number for a REIT. And they grew the dividend for 3 years in a row, which is also very nice. In here we see the dividends paid since 2012. It's increasing at a decent amount every year, so this looks really good to me. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at historical levels from here, which is very nice. Overall these dividends look really good to me, but how about the historical returns? I decided to compare ADC stock with the overall market, in this case the S&P 500. Next to that I added KRG and NNN. On the 5-year chart we see that ADC underperformed the S&P 500 big time, with a 28% return including dividends. The S&P 500 did beat most stocks in this list by a decent amount, except for KRG. On the 1-year chart it looks pretty different, with ADC sitting at minus 14% return. The S&P 500 and KRG are having a significantly higher return. And keep in mind this is including dividends. On the 6-month chart it is again ADC sitting at a negative return. The S&P 500 had the highest return. On the 1-month chart it is again ADC sitting at a minus 10% return. So bottom line, ADC underperformed the S&P 500 short term and long term. But with the stock hammered down quite a lot, it could be an interesting buying opportunity. So is this the perfect time to buy ADC stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 8%, 10% and 12%. Based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 30, 32 and 34%. And for the free cash flow margin I'm putting in 72, 76 and 78%. For the PE ratio I'm putting in 20, and for the price to free cash flow I'm putting in 15, 16 and 17. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now ADC stock is at $54.97. I hit analyze and we see a lot of green numbers. And since this is a REIT I'm only focusing on the discounted cash flow value. We have a low price target of $54, which is around the current stock price. And we have a mid price target of $69. And we have a high price target of $84. To me the mid price target is the most justified here, indicating that this stock is undervalued right now. My final conclusion on this stock is that I love this company at current prices. It's already in my portfolio and right now things look pretty good. REITs have been hammered down quite a bit most recently, and this is the perfect time to load the boat for me. Most fundamentals look really good and it is just a rock solid company, except for the debt. That is something that worries me a bit. From a dividend point of view, things also look really good with the monthly dividend being at a healthy payout ratio for REITs. I'm interested how this company will perform in the upcoming earnings report. It's going to have a big impact on the company and the stock price. For now, I'm buying more shares at current prices. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.